uh, mentoring the startups for pitching off the pitch deck during Elevate evaluation. So I think Anubhav can start with the session. Yeah, Pranav, sorry.
Hey, hi guys. Hi. Morning, everybody. Thank you, Government of Karnataka, KTBT, to arrange this. And thank you to all the founders who have come here. I'll do a quick round of introduction, and I think then we should be good to go. If you have any questions, I think we will take it at the end of the session. And we'll probably give 20-25 minutes for question answers. You can put it in the Q&A section down there so that we can have a little seamless conversation around it. I'm Pranav Mahajani. I head investments at Let's Venture. I have been a banker for the last 17, 18 years of my life. I've done over 100 listed transactions and over 100 unlisted transactions. So I've been very fortunate to be at the ringside and see all the big founders of our generation go about and build what they're building for the country and for the world. I think for first thing which comes to my mind is I think a lot of respect for the whole founder community, because all of you have left lucrative jobs and trying to create something for the country. So I think as Let's Venture and Trika, we have a lot of respect for every founder, whether you're successful or no. I think that is secondary. I think you just taking this thought itself is really momentous for all of us to be there. And in our journey, we can just quickly move. I have my colleagues Parikshit, Spurti, Anubhav on the call, and we have Sanjay, who is a co-founder at Let's Venture, who has built Let's Venture over the last 10 years. Let's Venture, as you all know, is India's largest angel platform, from Swiggy to Sugar to Redcliffe to Agnicool. Some of the finest companies have, been in touch with us, raised capital on our platform today. We work with around 20,000 odd investors, angel investors today, with 250 odd family offices today, and over 300 VC stock institutions with us today. I think our endeavor is to do the end-to-end journey from seed to all the way up to pre-IPO. That's what we are focusing on. Let's Venture is, many people don't know, but Let's Venture is backed by Accel, which is one of the world's largest and finest venture capital. We have Nandan Nilekani, Rashad Premji, Gopal Krishnan, and Rajan and Ratan Tata as our shareholders at Let's Venture. I think when you look at the whole angel investing, 1 out of 3 deals in the country will be done by Let's Venture. And I think that gives us a sort of very biased view of what's happening to the world around us, because we are seeing more deals than anybody else. Go to the next slide. Yeah, so I think this is the whole organization for us. I'm just bringing this up so that you have an idea of what we have done. Let's Venture is India's first AIF, angel AIF in the country. Then we created another business called Trika Capital, which is a subsidiary of Let's Venture, which is typically focusing on growth stage. I also head Trika Capital, where we're raising money from around 250, 300 large family offices and over 200 odd VC funds today. I think what we're trying to bring home in this presentation is not to teach you about your business, but I think to share our views on what we have learned from the finest founders, how they are really taking one idea and creating whole empires around it. And I understand that in a pitching session, you have around 8 to 10 minutes. I think that's a very, very short time. So instead of going into absolute nitty-gritties of design and technology and features, and I think that's where we all are getting lost many times. I think the whole presentation is driven around to teach you guys how to think in a fashion where you can really go out and give the message out very, very clearly to the panel and to the future investors you're going to look at. So we have a bit of theory, and after every slide, we have picked up Zomato as a classic case study. Zomato, because everybody probably would have used Zomato once. It is a legendary company in the startup ecosystem today. And from first day of Zomato till today, I think things have remained constant, but the thought of delivering around food has kept evolving, and the way the company has come along is really remarkable. So we have put a case study out there. We'll put a Google form at the end of this. If you need this presentation, we can email this to you. It's a short presentation, and I think once we do that, then we can enter into Q&A. We can move to the next slide. Yeah, so this is the art of fundraise. Parikshit will open the conversation with all of you guys. I will chip in whenever I think it's required. Parikshit, over to you.
Okay, thank you so much, Pranav. Morning, everybody. It's lovely to be connected with such a large crowd, and just the fact that we get to speak firsthand with so many wonderful founders is truly amazing for us as a team. So, what I want to try and do is basically cover three aspects. Initial aspects is what I would be covering. And this is the first aspect that we as a team want to emphasize on, and that is defining your company in one sentence. Now, when you are articulating the entire idea, there are possibly 12 or 13 key aspects that you need to try and cover in your pitch deck. Remember, it's just 8 minutes. You have such a short window to present what you have to. And the art of storytelling is something as an emphasis that you have to keep telling yourself. So, the first key aspect that we personally believe is very important to cover is defining what your company stands for in just one sentence. In this particular slide, as you see, we've taken few examples of certain companies that we have come across in our daily life, one or the other time. And for example, let's just take Mama Earth, right? Mama Earth describes itself as a personal care brand committed to providing safe, natural, toxin-free products for families. This is possibly such a catchy phrase, where at the same time they cover all aspects of trying to tell you who they are, and what they want to try and solve. Likewise, for Paytm, where say Paytm is a platform that enables users to pay bills, transfer money, and access various financial services. The mission statement is very clear, right? And that is the emphasis of this entire slide, where whoever is starting off their presentation, your entire mission statement, what the company stands for, needs to be very clear and has to strike out right at the beginning. Okay. Now, just as a case study, let's take what would Zomato have done, right? Zomato, very clear. They say a technology-driven platform that connects customers, restaurants, and delivery partners to provide seamless food discovery, personal delivery, and dining experiences. Very simple. In one line, we know what that company entirely stands for, right? This is something that has to be emphasized as a founder, because fictional numbers do not add value. It's the art of storytelling that really matters. And the emphasis of your story is what really catches the investor's eye, right? Now, personally, there are also a few things that we would like you to avoid, which is over technical, avoid jargons, phrases that confuse rather than bring out the value of what you're building, focusing on features rather than value adds. You can't just come across and say we will change the world. It really doesn't solve any purpose. You have to provide the entire value chain, value methodology that you are going to add as a company, as a founder, to the entire community that you're going to interact with. And lack of specifics. Make sure you have specifics charted out very early in your entire presentation, right? Moving on, the next aspect that we personally believe is very good to cover is highlighting the pain points for your target customers. The example over here, of course, emphasizes identifying market intelligence and the gap in those market intelligence, right? For instance, let's just take Mama Earth as an example, right? Because we all know and would have possibly used their product in some or the other capacity. Mama Earth identified that rising demand of toxin-free and natural products in the entire market of chemical landed alternatives. right? And they also try to describe that because of this entire market that they have kind of channelized the entire 40 billion beauty care market that they can work around. And that was very, very great. And that happens only once you identify the pain points in the market and the customers that you're going to target, right? That is very important over here.
I think what we have also, just to add here, what we have noticed is some of the most successful founders have actually tried to solve the problems which they have faced. And I think because they didn't get a product, they didn't get a service, they saw a gap. Right? So I think when you're able to do that, and let's assume even if you have a borrowed problem, it's not your problem, it's somebody else's problem, you're doing that. I think you will have to think that is it really a problem which you're solving for yourself, or you're trying to say that there are millions of people out there who will have a similar problem and I want to go out and solve the problem for them. I think that clarity of thought will give you a larger playing field and will set your boundaries for you to go out and work and really go out and adopt to a problem which you're trying to go out and fix it. But I think this clarity is definitely there. I think this also takes you to a point where there are a lot of Me Too businesses, right? People, like say in HR tech, like everybody's trying to create an HR tech system or a CRM, and then we can keep saying that I have this feature more and I have that feature more. And in our experience, what we have realized that every business might not be a startup, but every startup is definitely a business. So I think we will have to really go out and do that. And because ultimately, why do we call ourselves a startup is because we want angel investors, VCs, private equity go out and back you, and eventually you do M&A or an IPO in your life, right? And what capital does for you at that point of time is help you to, one, really grow very, very quickly. That is one. Two, it helps you to sort of bridge, a gap of time and space, because you're trying to bridge time because you quickly do will fast accelerated growth, and at the same time you will really go out and take this to the next level.
Yeah. Just to add on this, let's just let's just take Zomato's personal experience over here, right? Like, what are they trying to bring out as a value proposition? They're saying that they are going to be reliable and a diverse food delivery service platform, particularly for metro, tier 2, tier 3 cities. By doing this, they basically answer the entire pain point that is there in the market and the entire target customers with which kind of cities they're going to roll out the services in. Right. Few things I would avoid is, again, being too generic, adding a lot of statistical data, and avoidance of emotional connection. When you are interacting with with an investor or a larger crowd, remember the emotional connection with whoever you are speaking to is very, very crucial, right? So make sure that you kind of accept that and try to portray that in whatever you're trying to communicate. The next, what we want to cover is providing a comprehensive solution. So once you have identified the pain points and the target customer, you also have to go in the next, the most possible transition is, what are the comprehensive solutions that you're going to provide, right? This slide basically shows how companies provide a clear picture of what they're trying to solve. Now, again, in the Mama's example, they address customer concerns by offering toxin-free and eco-friendly personal care products. Very clear. And in that particular phase, they also tell you that there is an entire 40 billion market over there because we're trying to solve this, right? Few aspects that have to be tried and covered here. Make sure you address the problem straight to the point.
I think
Right.
we also notice many times, is that sometimes this comprehensive solution strategy actually keeps evolving with time. And
Yeah.
as you keep developing your market, as you go closer and closer to your customer, uh, I think it'll evolve. And we have seen most companies, like even if you look at Swiggy or Zomato's own journey, from say discovery of restaurants to delivering to Blinkit or to Instamart, or to Zomato Hyperpure, they have completely kept evolving themselves as and when they found a business opportunity to work with. I think what really helps very, very early stage founders in our view is a lot of interaction, with the customers. Many times we have seen founders spend a lot of time building their products in isolation without really going out and talking to customers, understanding, solving a real problem. So I think go out as much as you can. But I think when you're presenting your idea, whatever you have learned, I think don't get into specifics and that this customer had this problem and we went and solved it. I think that doesn't really matter. What really matters is that this is the industry which you're addressing to. This is a niche area or this is a broader area we are focusing on. And this is the solution we are providing you with. So keep that very, very, very clear in your approach.
Right. Now, considering taking Zomato's case over here, right? What they when it comes to solution, they provide every detail such as integrated logistics, food delivery, quick commerce, seamless, scalable opportunities for the company, right? So you have to try and make sure that you cover four aspects. What is the problem that you're addressing? What is the core value that you're trying to create? uh, Building for the long run, right? Because any company, how we are going to evaluate is how long can it survive the entire market. So the aspect of building for the long run should be laid out. Of course, this is something that's going to evolve. You won't have answers right from the beginning, but as a founder, as a startup, you should try and make sure that you touch upon those aspects. Real world impact, of course Zomato, but you also look at Uber, right? Uber is a solution that can everybody can use it anywhere in the world, right? That's a real world impact, and that makes sure that it is of course touched upon and designed for growth. Every company is always going to be designed for growth, right? And that is something that we have to make sure we emphasize on, because any investor who's coming and becoming part of you is taking a long term bet, and they want to be part of the entire journey. So you please have to try and make sure that's very clear in what you're trying to bring up. Now, with this, I'll hand over the next bit of our presentation to my colleague Spurti.
Thanks, Parikshit. Hello, everybody. So I will be covering majorly in terms of the market sizing and how a company is built around the overall changing trends in the current market scenario, or taking some of the past experiences or the past companies into relevance. So why now is a very important question, right? Even as a founder, or when you're asking yourself as to why you're exactly building the product or the service that you're actually building, you have to look at the urgency or the relevance of your business ideas in the current market context. So, for example, when like a decade ago, if you look at the rise of the mobile adoption and the internet penetration, that gave rise to a lot of convenience driven sectors. Like, for example, Ola made it very convenient where mobile phones were actually used as taxi stands. Now, when it comes to Flipkart, you can look at how they brought the entire mall different fashion aspects to the Indian consumers at home to book, right? And additionally, if you look at Paytm, came exactly at the time when the demonetization or the digital India movement was introduced, right? So catching on to that shift in the market and then building a product that is relevant or that is making your consumers have a very convenient uh, lifestyle is something that plays a very important part over here. And now, when you're looking at the current market trends, right? So there is a shift in the consumer preferences and how they are very conscious about the products or the services that they go for. So, in that sense, we have Lenskart, we have Zerodha, which made an early smartphone like users as they captured a very small retail users and then built from their entire retail or the private equity investments. into the market, right? And similarly, you have CureFit that is redefining the entire wellness by providing the holistic approach, right? So they have the workouts, they have the meal options, and also mental wellness, all of us put together. So it is actually adding on to the overall shifting trends or the mature digital adoption that is taking place in the current trends,
Just to
right?
add to this, I think what is critical to understand is if you're targeting markets, there are multiple kinds of markets. There could be a movement from unorganized to the organized part of the market. There could be existing organized players, listed, unlisted, who are going through certain transformations. And like give an example, like say Wakefit, you already had Kurlon, you already had Sheila Foam and all, but they still thought that there could be a better way to do this. What we're also trying to bring home is that you are not working in isolation. You are working in an ecosystem which is actually enabling your business. So I'll give you an example. If Geo wasn't there, people, a large percentage of population wouldn't have mobile phones, smartphones. And because of which Zerodha wouldn't have got into or reached the scale where it has reached today. Zerodha has been around for a long time, right? Similarly, if you look at the quick commerce piece of the business, quick commerce wouldn't have been successful if Swiggy and Zomato weren't already ordering the way they were working with all the writers and all the ecosystem around it, right? All the new generation, consumer brands, they will find it extremely difficult if the go-to market was not there through Myntra, Nykaa, quick commerce, right? Because your go-to market strategy is completely offline there, right? So I think whether you're creating a platform or whether you're creating a service or whether you're creating a platform and a service or you're creating an ecosystem, I think it's important to look around and say that are we in an ecosystem which will naturally give me some tailwinds? And I think that tailwind is something which we should really go about talking in our presentation, because it is talking about external macro factors or ecosystem factors, which are actually giving you a natural push in the right direction. So, every time we get a founder who comes to me and says that, I want to create a completely virgin category. And we saw that in space tech when we saw Agnikul, Skyroot, and many other companies, go out. A lot of things had happened in the world, but in India, nothing had happened. Then we realized that the mindset of the founder and the people who are backing the idea and the idea itself needs to have a very, very long runway to work with. And I think that assessment is typically done by most large investors. So if you're going to create a category, and it's very funny, every time in an established category, the latecomer really enjoys all the benefit because he's looked at everybody. He sees what disadvantages people have had, what has worked for people, what has not worked for people, and they go about. So I think it's very important to go out and tell them that why now has two dimensions. One, why do you think the idea is going to work today and your idea is going to work, and the environment in which the idea is going to work, because both of them should give real impetus to your growth. Go to the next slide.
Yeah. So then again, we have taken Zomato as an example, right? So we are looking at both the trends. When we're looking at the historical trends, when they actually made an introduction into the market, how was the market? It was quite fragmented in terms of the food delivery options. Most of the orders that you had to do online was on the phone without any logistics or discovery platforms that was available. Then the very early aggregators like Food Panda or the Cloud Kitchen aspect of it, right? So before the Cloud Kitchen aspect of it, Food Panda came in where they just listed the restaurants, but they did not have that kind of an infrastructure for delivery as such. Then there was again technological gaps where there was no real-time tracking for the route or the pin codes that they were serving, or the digital payment options, or the overall user experiences was very fragmented, and it was not providing an end-to-end solution. So when Swiggy or Zomato came into the market, they bridged these gaps by providing an end-to-end solution. So they combined discovery, ordering, and delivery into it. Now, when you're looking at the current trends, right? So there has been a shift in the consumer preferences, like they've become more health conscious. They're going for remote work options, and because of which they require the food delivery uh, option to be very essential for them. And again, like the increased adoption of technology in terms of the internet or the UPI expanding their overall user base. And also, when you're looking at it from the perspective of competitive validation, right? We have Blinkit or Zepto investments that focus on really hyper local delivery potential. So, also keeping a competitive validation into mind, they have collaborated with different restaurants and brands and positioned them in on their platform. So far, whatever they did from the time that they launched to till now, they have made themselves as the market leaders, opened that opportunity for any new brand to come in. Like, let's say if there is there has been a changing preferences in terms of a consumer's palate. They would like to look at, or they would like to enjoy cuisines that are outside of India, right? Like Japanese or Chinese kind of cuisine. So most of these premium brands also have that kind of confidence to list their brand on these platforms. So they're delivering both the value for both the consumers and their listing or the brand partners over here. Right. So that is the main concept over here when you're looking at why now as a segment. Next, we talk about market sizing. So when we are looking at the market sizing, most of the times what we're looking is the founders are just introducing the entire market, right? For example, if it's a global healthcare, it's an $8 trillion market, or if it's an Indian healthcare, it's a 300+ billion dollar market. But it does not give any understanding of a real opportunity to the investors, right? So having a market sizing in this way, where you're going from the top-down approach, could be really unrealistic for any investor to understand, or to understand how you're going to scale the business, or what is your penetration strategy into it. So that is why it is very important that we explain it from going small, right? Just having a very small approach or small set of your target audience initially. So if you just look at the calculations, we're just using that how many target users you're going to have, what is a realistic price that you're going to set, right? When we talk about the price, again, you're looking at it from a very conservative to a premium pricing kind of a category. Sugar and, for example, sugar, when it came into the market, they played on pricing and packaging, right? So most of the brands or the beauty products that was there in the makeup products that was there in the market, they did not have the kind of pricing placement that sugar came in with. So that is one of the aspects, and also the actual usage duration, right? When it comes to a SaaS-based product or technology-based product, what kind of usage that their consumers would have. Having that understanding and then plotting your market or your overall total addressable market is quite realistic, right? So when you're looking at it in terms of the value rule, so we are saying that here, the penetration is greater than the overall market size. How are you going to penetrate into your target customers? So when Zoom started with their online video calls, they just started with only the tech companies, but they did not make it into a global video market as such. Similarly, when you look at Amazon, so they had a very clear structure, right? So they started with book first, and then they became a marketplace, and everything else added on to it. Similarly, if you look at Shopify as a segment, right, they started with the snowboard shops. Now they are a huge platform for companies to set up their online stores, right? So this idea or this strategy of curating your market sizing is very important. One of the examples that we can take here is also Farm Easy, right? So Farm Easy was when they came in, they were addressing a very affordable and accessible medicine delivery, and they focused on initially the tier 1 cities, right? So when you're looking at it that way, then what is the urban household number and what kind of average order value that they would have, and what is the kind of orders per month or even annually that you can take, and then you plot the overall market sizing there.
I think what we also noticed with some, more startups is one is India, obviously a very large country, so you can't go out and attack all parts of the country, right? You will predominantly look at one or two geographies or one or two cities to really go out and start testing your product and start going deeper into it. Founders which we have noticed have really spread themselves thin by going to multiple touch points in the country have really suffered, because you can do that only with a lot of capital which you have. So I think being specific about the SOM, saying that phase one, this is my SOM, this is my TAM, and I'll keep expanding it over a period of time. I think that is the safest strategy to be in. The companies which have done well are operating in, say, 2, 3 cities to start with, or one city to start with. And then they have kept adding cities as and when, their business model gets, more confirmed. They actually got sort of cookie cutter ideas to go out and take this idea and implement it in some other city. The playbook actually has started coming out very, very strongly. So I think, and that a lot depends upon, because anytime we listen to startups and say the TAM is $20 billion, and I'm going to go after that market, that's a fictitious number in my mind. The real number could be probably a few hundred crores of market today to start with. What you can actually go out and touch and achieve and try and get a share out of, and over a period of time, you will keep, building and keep expanding. At the other end of the spectrum, when you look at, say, companies like Swiggy, Zomato, or Paytm, these companies are actually capable of expanding the whole TAM they can actually expand the TAM. They can take the whole concept to newer geographies, expand into newer areas, and create ideas and businesses which we have never seen before. And I think that's the sign of a market leader, that and like if you look at, say, Amazon, you look at Apple, you look at Google, they keep expanding into areas which have never existed, but that's for a very, very mature stage of companies. But we will see that. But I think what's important for you today is to say that phase one, this is what we are targeting. So whenever an investor looks at you, he knows that you have come with a plan. It's not that, okay, I'm going to go and paint the whole country red. It doesn't happen that way. Say I'm going to just paint Bangalore red. That's fine. That's more believable.
So again, taking the example of Zomato, right? So I've just curated calculations in terms of SOM, SAM, and TAM. So the initial serviceable obtainable market, right? When you're looking at it, if you're focusing on the top 10 cities, we have 50 million users, like when we're looking at it from the perspective of internet users, right? Then we have a market share of 50%. So when it comes to Zomato and Swiggy are the major market players in the market, right? So then again, you're looking at it from what is the pricing that you would add, right? The average order value in a year. So annually, I've taken it to be around 2,400 rupees. It's much more than that, but this is just a hypothetical understanding to show how the calculations has to be done, or to have that clear cut understanding on how you're going to penetrate into the market. And when it comes to serviceable available market and the TAM, the total addressable market for Zomato, how they would be able to scale into different cities and go completely pan India is something that is being plotted. Again, when you're starting out, having a very niche target audience, right? If you're looking at it from a Zomato perspective only, if they are reaching out to, let's say, another urban city, and they're majorly focused on health conscious professionals, so that could be around 10 million users, right? Again, then you're multiplying it with the health meal services, or how much to charge, or what is the average order value of that. Let's say a 500 bucks per order, and the average order per month would be around 10 orders per month. Then again, like, you have a huge market if you're looking at it from that perspective, right? You have almost 18,000 crore market annually, just when you're focusing on just that niche aspect of it.
I think slowly we need to move. We're falling short of time.
Yeah. So to move ahead, we can talk about the competitor analysis. Again, a very comprehensive view is very important here when we are looking at Zomato as an example here. Again, their direct competitor.
Okay, I'll just quickly take it up. We're falling short of time. I think what's important is to look at whom you're competing with directly, whom you're competing indirectly, listed, unlisted, because the landscape is very, very large. And also whom you're competing with an adjacent, with a new industry which will actually replace you at some point of time. So I think competition, because many times people come back to us and say, I have no competition because this feature nobody else has. I think it doesn't work that way, right? I think it's important to bring out very, very strongly, and it's okay to say that this is my competition, because every time when we notice that people are not identifying competition, that's when we are not very happy about it, because it's important. It's because there's no need to get scared that there are 25 competitors. That's fine. The question is, yes, I acknowledge the competition in the room. And the question is, what am I going to do about it? How am I going to really go out and tackle it? So we'll quickly skim through this. We'll go to the next slide. Yeah, so I think direct competition for Zomato is Swiggy. Indirectly for, is obviously is Zomato, is Zepto, Blinkit, and then you have a bunch of other guys. So, when you look at the whole landscape, that directly and indirectly they're competing on a lot of other angles with a lot of other people. Go to the next slide. Yeah, Anubhav, you want to quickly take this through?
Yes. Thank you, Spurti. So just quickly taking a step back as to what we have covered so far, right? So Parikshit spoke about describing your company in one particular sentence. Then we spoke about problem, what the solution is. Spurti spoke about why is the current time for you to build this product, right? Why now? What is your market size and competition? So now I'll quickly take you to the 4 next key pillars of every investor pitch that should be there, right? In every pitch that you make. Number 1 is product. Number 2 is business model, team, and financials, right? So quickly, what you can see right now on your screen is the product/services slide. So key question that a founder or a co-founder or a team should answer themselves, right? Are you a product company or are you a service company? A product company maybe could be building something scalable, right? Like a software, hardware, or a physical product that you can think about. A service company, on the other hand, you can think of it as someone who provides expertise or support, like think of a consulting firm or a platform, right? But eventually, a couple of key questions that you need to check out when you are going to go into that 5 to 8 minute pitch time that you're going to get, right? So 4 key questions that you should answer here. What is your product? What problem does it actually solve? Why is it unique? And what's your product roadmap? Yeah, Surti, say on this slide. Again, what problem are you solving? The best product solve critical pain points that customers are desperate to fix. What's your unique solution? What makes your product stand out, right? Is it a proprietary tech, better user experience? Could be anything. But when you go into that pitch, you have to make sure that the investor understands as to what unique solution you are going to offer, right? As Pranav said, could be 25 other folks also doing the same, but what exactly are you? What is your edge in terms of that, right? That an investor should be able to understand in the 2-3 minutes that they get with you, right? And eventually what impact your product is going to have, right? How is your product going to make life easier, faster, or cheaper for a customer, right? Again, a tip here, I mean, we don't buy products, we buy solutions to our problems as consumers, right? So you have to make sure that your investor understands that. Parikshit, we can move on to the next slide, which is business model. Yes. Now you have to make the investor understand as to how exactly do you your business model is and sustain growth, right? There are typical 2 types of businesses that founders may adapt. Number 1 is your high volume, low margin model. Examples could be Swiggy, Zomato, Ola. These businesses usually target massive markets but have low margins per transaction. Again, high volume, low margin models, they require significant upfront investments to capture market share, right? Again, as I said, examples are Swiggy, Zomato, and Ola. Other type of business model could be your high value, high margin model, right? You can take examples of Wakefoot and Oat here. I mean, these businesses focus on high value products with reasonable margins, right? They achieve profitability faster as compared to the other model that we spoke about. But again, when you speak about your business model, 3 key questions that I think you should answer when you go into the, Elevate pitch this season. Number one is, what are your revenue streams? Clearly highlight, in case you are getting advertising revenue, you're getting some commissions revenue, you're getting some subscription-based revenue. Clearly define your revenue streams. Who exactly is your paying customer? Whether you're selling it to businesses, whether you're going D2C, it should come out in your pitch deck. You can have one bullet point saying, who is my customer? XYZ is my customer. Investors should get that clarity. And eventually, how exactly do you scale this model? How do you make this particular customer pay you again and again on a repetitive basis? That is something that should come out in your pitch deck. Again, a tip over here, business model is a story that explains how your company actually works. Make sure when you come out of that pitch, your 7 to 8 minutes pitch time that you're going to get, investors should be able to understand what you're doing. Right, so we can move to the next one. Coming to team, right? I saw a question in the chat box as well. They were asking, like, they have a co-founder, shall the co-founder pitch or shall the founder pitch himself, right? Again, it depends on you guys. In case you have a co-founder who is going to be there with the pitch deck, make sure you split your time in between you two guys so that he gets talking time, you also get some talking time, so that the investor gets to understand as to what the team is, what the capabilities are, right? Yeah, sorry, something happened. My screen just froze. Yeah, so when we talk about team, right? So investors bet on people more than they bet on ideas. Again, 3 key questions that you should check off in your pitch. Who are the key people? What makes the team qualified? And how are you building the right culture around it, right? So one major focus point should be that the team that is actually building it, they should have the domain expertise when they go into the pitch decks, right? Number one. Number two is, if you have any advisors or mentors on board, please make sure that you highlight them in the pitch decks. And the last part is passion and vision, right? So you have to articulate the passion and the vision that you have for the business, right? That the team has for the business. Moving on to the next one, Michelle.
Anubhav, hi. I just need to let you know that we have last 12 minutes. So 10 minutes will be reserved for Q&A. So I think you need to wind up soon. How many slides is
So
left?
only, just a couple more slides.
Yeah, sure. Yeah, thank you.
Just winding this one up. Yeah. I can't see the financial slides. Is it up? Yeah, I can see it. Again, just when you talk about your financials, right? So you have to make sure the investor understand, like, how healthy is your business right now. Your financials show the health and potential of your business. Key metrics to cover over here are nothing major, because this is your first initial pitch that you're going to make to the investors that you don't have much of a time. Major things to cover: your revenue and growth. What is your current MRR? What is your current monthly run rate in case you are generating revenues? In case you are pre-revenue right now, make sure that you tell your investors that we are pre-revenue at this particular stage, but this is the plan as to how we are going to monetize this particular model. In case you are generating those early revenues, make sure you highlight that those in your pitch decks, right? Burn rate, runaway should be clearly defined in your pitch. And eventually, what is your unit economics, right? In case you're making 100 rupees in revenues, what is the cost involved there? What is your gross margin? After that, what are your operating expenses? How much are you shelling out in salaries right now? What are your operating costs, your marketing costs, and what is the final bottom line EBITDA number that you are arriving at? In case you have this clarity for your initial pitches, you are going to go, right? Revenue is vanity, profit is sanity, cash is reality. So make sure that the investor understand that how much cash is going to be required to build this XYZ product that you're trying to build, right? Parikshit, quickly moving on to the next one. So what I'll do is, I have given you these 4 basic pillars. How do we now apply this to Zomato? Now, if I had to pitch Zomato right now, and I know that I only have 5 to 8 minutes of time, I'll just quickly summarize whatever I have to say in my pitch, and I'll leave as much room as I can for the question answer sessions, right? So when I talk about Zomato's product overview, so we started off as a restaurant discovery platform. Over time, it evolved into a food delivery platform, and now includes quick commerce through LinkedIn. We are solving the problem of fragmented food discovery and inconsistent delivery by creating a seamless platform. Business model: Zomato operates multi-revenue model. We earn our revenues through 4 segments, 4 key verticals. Number one is commission. delivery fees, subscription services, and advertising revenue. That's it. That's all I'm going to say in the business model. Because in case I was pitching it in under 2 minutes. Moving on, Parikshit. Next is the team. Our team is uniquely positioned to succeed, and because we have deep expertise and knowledge. So this is the CEO. He comes from XYZ background. This is the leadership layer who are coming from, restaurant industry. They have spent their time in FMCG, and now we are a capable team which can build in this, right? Coming to the financials part, these are my gross order value numbers. These are my adjusted revenue. In the past quarter, I have done XYZ amount of revenue. I have done 800 crores of revenue. We have grown 118% year on year. That's it. That's my pitch to the investors, and I'll leave everything for question answer after that. So just to sum up, product, business model, team, financials. If you have these 4 things ready, you are good to go. That's my time. Yep. Over to you, Pranav, and over to Q&A now.
I think we can take up Q&A now.
Yeah. So I think people can just put the questions in the chat and we'll try and address them. So I'll take this question from Venkatesh. He's asking that, startup focused on building in India for the world and targeting enterprise customers. Are there any critical aspects of the pitch from a B2C perspective? So I think if you're building for the world from India, I think it's very important that one to understand, a very few investors understand this very, very deeply, right? Two is their go-to market is usually very, very long. So unless you've come from that background, people will not take you very, very seriously at that point of time. Three is that when you're competing on a global market, we would suggest that try and focus on a very small aspect of the market which you really want to go out and solve it. If you come out and say that I'm going to find another search engine or I'm going to replace Netflix, it doesn't really work that way. So I think it's important that, and again, I'm seeing a question where it is a B2B sort of a business. B2B products, we have noticed, take a very, very long time to really ramp up especially from a SaaS perspective. Reaching a $10 million revenue will probably take you anywhere between 3 to 5 years to reach that point. And the investor class who's backing you will really need to go out and, spend some money. So typically the product team sits in India and the sales and the marketing team will be sitting in the US or any jurisdiction you're looking at it. B2C India focused businesses, are relatively easy to understand from an Indian investor's perspective. Typically large global VCs do understand B2B, B2B2C. There are few Indian investors who understand. Angel investors, in our view, have really struggled to look at businesses which are largely B2B US focused businesses because they know it takes very, very long time to build it. And typically the exit of such businesses is sort of an M&A. You might be getting acquired. So it'll be good to build one tool or build certain, a certain bouquet of tools, go out, sell that to certain customers in the US, and then eventually quickly get sold to any large global company who wants to be a part of that. Let me see what else can be show traction. Yes, if your startup is having traction, it is revenue. So if it is pre-revenue companies, people, it all depends on investor mindset. If you're an early stage investor, seed investor, it's okay, no problem. The mindset is different. But as we're doing more and more number of deals, we would really like to see companies which have certain amount of pre-revenue which is coming up. The reason being that the first few crores typically are coming in from the founder, his family, friends, former colleagues, people in the industry. If they are not ready to back you and trust you, because it's a game of trust, right, at that point of time, then the incoming angels and the early stage VCs find it very difficult that people around you don't believe in you. So I think it's important that the first level of checks which come through should come from your network. It also gives you a lot of time to learn to pitch, to take it to the next level, to understand your own pitching game, evolve the thought process. your mentors, former bosses, people in the ecosystem, your family, your own money. I think that is first, and yes, obviously the government grant which is coming to you will help you. But when you want to take it to the next level, this basic stuff has to be done. The product has to be somewhere ready, and pre-revenue or near to revenue is something which will really help you and take you to the next level. Yeah, somebody's asking a question that if you are, if you are operating in a business where there are large players like Zomato, YouTube, Insta, I think what we have noticed is that even if your business idea is great, the number of investors who want to really back you are very far and few. So I think at that point of time, if it's saying that I will challenge YouTube, I will challenge Zomato, I'll challenge Instagram or LinkedIn or and so on and so forth. I think it's very, very difficult. We're not saying it's impossible. We have seen companies get created, but you will need early backers of tier one VCs. You will need a peak 15. You will need an Excel. You'll need a matrix to go out and really write that check for you. Just by collecting checks from angels or family offices, it's not really going to fly. So if you have a world-changing idea, you need to have the best backers really working with you. And I think that does two things. One is validation of what you're thinking is in the right direction. And two is also validation to yourself that you're not going to waste your time trying to build something. Typically, we have noticed that companies who are building niche products, focused areas, very high margin profiles are, acquisition targets for the Zomatos, YouTube, Instagrams of the world. So I think either you're building to sell or you're building to buy. How much time do we have still? Another 2-3 minutes?
So another 3 minutes. So I think we can take.
Okay.
So we have another 2 minutes, sir. 2 more minutes. So you can take up 2 more questions.
I have one question. I think a couple of people have asked me questions on deep tech. I think, one is deep tech is not understood by a lot of people because you can't see it, right? And it's happening in some zone. That is one. Two is the go-to-market for deep tech is also very, very long. Three, what we have noticed with deep tech is that the companies which come out from the deep tech ecosystem are really phenomenal companies, because they've really changed some aspects of certain industries. Again, coming back to the point that one, the founder needs to have absolute qualification to be operating in that zone. You cannot say, I will learn and I will create a deep tech company. It doesn't work from that way. Two, the team has to be really pristine, absolute top of the line guys who believing and working to what you're trying to do. Three is, again, the investor. There are probably 25, 30 deep tech investors in the country, who really understand and who can really go out and add value. It's important that you work with those investors, and if one of them backs you, then you are home. If they are not backing you, and if you're getting similar feedback from everybody, then either you expand, try and get money from across the world, or else then you'll have to relook at what you're trying to do. So I think the deep tech is difficult. We do a lot of investments in deep tech, but we always find it challenging with time, how these founders are coming along. But I think investor backing with the right mindset is very, very critical. You guys can write to us if you have questions. Happy to take it offline. You can connect us on LinkedIn, and we'll pick it up from there. Cool. Okay.
Yep. Sajid, I think we can wrap this one now.
Sir, I think we can wind up the session, sir.
Yeah.
Thank you, startups, for your participation and all the best for your pitching during Elevate 2024 program. And I think we can wind up now. Any question, I think they can reach out to you, I believe.
That's
Sir,
right.
in the Q&A, this thing in the chat, this thing, can you add your mail ID so that the startup can write to you if they have any queries, any like general mail ID, a query mail, like a helpline mail ID, so that wherein they can reach out to you regarding any Q&A regarding pitching or pitch deck preparation?
Sure. We'll do that. Anuv, can you just put deals@letsventure.com?
Yes, I'm putting the Google form as well. So in case you guys need the PPT that we presented, so I am just okay.
In how much time do we start the next session?
Sir, on
Another
11:10, sir, 11:10, we have 10 more minutes for buffer. So
Oh,
we'll start around 11:10.
fine. Thank you, guys. Thank you.